This is now the fifth week in a row where we've consolidated within this tight range. And personally, I can't remember a time where we've consolidated for this long in this tight of a range. So very rare to see something like this. And what that means is whichever direction it decides to break, whether it be to the upside in terms of a breakout or the downside for a breakdown, means that the direction it chooses is going to have a very large move in either direction that it chooses because of how much kind of like pressure is getting built up. Just think of it as like a spring. We're consolidating for a super long amount of time, kind of like a spring loading and coiling, and whatever side it decides to break out or break down to is going to have a very large move following it. And also along with that thesis in terms of a large move happening, if you go over to the dark pool levels feature here on Cheddar Flow, you can see now we had $4.2 billion worth of premium in terms of signature dark pool prints today alone. And guess what? If you look back at the other days, you can see here on Tuesday, we had 3.5 billion. That's 2 days in a row where we're over 3 billion. That's rare, guys. That's not common to see over 3 billion for 2 days in a row. And then if you look on Monday over here, you can see we had another 3 billion plus day for 3.7 billion. Super, super rare, guys, to see over 3 billion for 3 days in a row. It is not common at all. Again, if you see something over 3 billion for just one day, that's typically a large amount of premium. But to see something like 3.5 billion, 3.7 billion, and then also over 4 billion 3 days in a row, a big move is approaching. Again, people may ask, what direction do you expect? Personally, I rather play the less risk side, and in this case, look for confirmation below or above this range. It's a lot easier than trying to guess because as of now, it would be kind of 50-50. I personally have my bias, but I'm not as convinced to take a position while we're right in the middle of the range. I rather get confirmation because we know that whatever direction it chooses, whether it be up or down for the breakout or breakdown, then it's going to have a large move after. So if I wait for a breakdown in this case, if it were to happen, where it would happen right below this COVID trend line, which I've shared with you guys before, the one that connects to June lows, this would be a perfect opportunity for a daily close below where I could add or enter in a position following that daily close below, because then I have my confirmation that, hey, we're below the range you've been trading within or consolidating within for a long time. Also, we're below that COVID trend line. Plus, we've been rejected 2 times off of this downward trend line, which goes all the way up to all-time highs. I'll show that to you guys right here. This is the one we've been rejected off of 2 times so far this year during this bear market. And recently, we rejected 2 times off of it. You can see we actually tested it today, intraday. As you can see with the candle right here, this candle wick, it tested right up top here. And then also we tested on December 1st for rejection. So 2 rejections so far as of recent. So if we had a daily close or 2 daily closes below the COVID trend line and the channel right here, that would be a no-brainer in my opinion to go short, or at least decide to enter a short position if I see risk that is mitigated because I'm able to take a position off of this. And my risk in this sense would be cutting my position over the COVID trend line if we had another daily close back above, because that would negate something going below. But that's just what I'm thinking in terms of the downside. In terms of upside, I'd like to see us first of all get above the downward trend line I showed you guys from the all-time high. That is a must because so far it's been rejected, as you can see here, 2 times specifically, but also you can consider this over here for yesterday on Tuesday, another rejection. We gapped up above it and it was not able to hold above the line. That shows weakness. When you have a gap up, that typically means, or at least a gap up in this case, above a critical line, that typically means that there's more bullish emphasis for that day for continuation upward. If you fall back below that line, that means there's not a lot of buyers supporting the breakout. Because remember, extended hours, there's a little bit easier of a sense to get over a certain resistance level and also under a certain support level. And it was able to get above, but during the real-time hours during the day, it was not able to hold when volume started flowing in. So that shows weakness. And then again, another rejection today off of this. So as of now, it's looking a little bit more bearish, but again, we are in the middle of this. We still have Opex end of the week. You will want to look for that because typically that has kind of wacky price action. So as of now, I'm waiting for confirmation, whether it be below or above. And I would urge you guys to do the same because this mitigates our risk. It's like kind of like a coin flip toss as of now. We've been consolidating within here for so long. We're right in the middle of the range. I rather wait, be patient here. I know it's been hard to be patient the last couple of weeks because of all this chop, but I'd rather be patient. And then when we have a direction that's kind of clear, then we can trade based off of that. An individual ticker that I want to bring to your attention is Microsoft. This is an interesting setup because we had a perfect retest of this downward trend line. This downward trend line is very similar to the one I just showed you guys on SPY, because this connects to at or near all-time highs for Microsoft, and it's basically been rejected all the way along throughout this like kind of bear market for 2022. We did have a breakout in August over here, but it was very short-lived. We have a head and shoulders pattern. You can see here the left shoulder, the head over here, and then the right shoulder, and then it fell back below and then retested it while it was under. It was unable to get above and continued to fall. So this was basically a fake out because it wasn't able to stay above for a very long time. What's interesting about the current trend for Microsoft is the fact we broke out, as you can see back here on November 29th, and we've actually held above. We've retested it, and the fact that it retested and held above shows strength. So that's, first of all, a good thing. Second of all, we had a bounce, and a pretty sizable bounce at that, off of that retest. So again, that shows strength. And then also, we had some decent call flow hitting the tape at the money, or at least a little bit in the money earlier this week, at least yesterday on December 13th. We saw a bunch of 250 strikes throughout the day, and then these were for 12:30 expiration, so pretty close in terms of expiration. I'm assuming these people are just getting in for a pretty quick move, nothing like super long term for them, just because the trading conditions have been pretty choppy as of recent. But for the most part, this one is looking fairly bullish as of now. Again, it needs to maintain above this downward trend line for any form of bullishness. If it falls back under, then that's definitely very bearish. You're going to see something very similar to what happened back here if it falls back under, so do keep that in mind. But as of now, it is holding strong above. I like how it bounced over this. I like how it's kind of like followed by call flow as well. And then I'm personally just keeping this one on my watch list to see if we maybe get another retest of around this like 255 to 250 level for potential entry, but it does need to hold above that for it to be valid to continue up a lot higher. Additionally, DXY has still seen a lot of weakness, even though, like, yes, the market has been choppy for the past couple weeks, obviously, but we've kind of seen more of like a bearish emphasis in the last 2 days, and yet the last 2 days on the dollar have been bearish. You can see here we've continued to fall lower after it broke through. If you remember from my last weekly recap video we did, or I think it was like last week, that one, I was talking about how it was getting weaker and weaker. The dollar was getting weaker and weaker as it tested the support level of 105.35. You can see here we had a bounce originally over here on November 15th that went up to around 107.88, fell down again to try and make a double bottom bounce, but this one had a lower high. So that shows bearishness because this one was not able to continue up higher than the previous high that we had here around 107.88. So that was bearish in itself. We fell below the level. It retested the level over here on December 6th and 7th, and then it fell lower off of that. As of now, this is a bearish structure, especially as long as it continues to stay below 105.35. So you would assume this could help the general market in terms of catching a bid, but as of the last couple of weeks, they've kind of been off, and weakness for the dollar hasn't really converged with as much strength for the general market. So personally, I haven't been looking at this as much in terms of the last couple of weeks. If we did have a big move in the dollar, that would most likely lead to some form of a move in the general market. But as of now, this is showing weakness. The better thing to look at the moment is the VIX, actually. So if you go over here to the VIX's chart, this is what I'm more interested in, because DXY kind of helped us as the VIX was getting hammered on the way down to see kind of short-term weakness in the general market. Now it seems it's switching back to VIX to give us a better sense, because as of now, the VIX was rejected very, very hard from this yellow trend line I had here. This yellow trend line goes back to November 4th of 2021. This is critical. If this is broken, which I expect it to happen in 2023, if this is broken to the upside, eventually this trend line specifically, we will see a very large and quick downward move in the general market. You can see what happened last time this was broken to the upside. We had a gap up above it. We had a retest over here in August, and then it continued up a lot higher afterwards, and that's when we saw a very sizable downward move, and we ended up seeing a new yearly low because of this big volatility run-up. So keep this line in mind. As of now, it's been rejected very hard off of it. So that's one thing to keep note of. A rejection this hard typically means that you're going to have to, at the very least, see a basing period of time here that has to base around and consolidate or fall a little bit further before having another crack at it again. As of now, it's stuck between both of these trend lines. The blue one also goes to that November 4th pivot date, but also goes to the August 12th bottom that we had over here before VIX started to get some pickup. So as of now, these are the two lines that I'm watching. The main one is this yellow one, but we are finding a little bit of a support around here for the VIX. But again, I'm mainly watching this yellow one because this would give us confirmation of extended downside in the general market if it does break in the future. Last thing I want to mention, pay attention to the VIX, especially the next couple weeks. This is rare to see a $3 million print, $3.5 million print, a couple of these $800,000, $600,000 prints, and then also another $1 million print, all for out the money strikes. This is interesting, not very common to see this many of them hit the tape on a given day. This is only from today, Wednesday, December 14th. So continue to watch this, especially if this becomes a trend. Remember, in August, we saw a lot of these prints coming in and hitting the tape around this time for the VIX. If I go back to the chart here, it was around this time before it started to pick up. It was specifically, you can look back on the historical flow too to check this. August 17th, August 18th, and then also August 19th, we saw a lot of prints very similar to this before it started to pick up. You do want to make sure there's follow through in the next couple of days. That would give us a little bit better of a sense if this is a legitimate move, because we have seen in the past like a day where we see a very unusual prints, but then there's no follow through after that. So do watch and see if there is follow through in terms of VIX flow, because as of now, this is pretty bullish flow for the VIX. This does have a little bit more expiration than we're used to seeing, because this goes into 2023, but still looks like they're just trying to add time to their position. And again, all these are out the money quite a bit, especially this 45 one. So continue to watch this. It can give us insight on where a potential down leg may start in the market, because typically whales like to get into volatility before it's kind of that down leg starts to kick off. But other than that though, appreciate you guys watching this video, and I will see you guys next time on Sunday.